This week's listener of the week is Leah at home. Leah, thank you so much for leaving us a 5-star review. And for those of you listening, if you leave us a 5-star review below, you might be next week's listener of the week. Week. This week on Commercial Real Estate Secrets, we have Jake Clopton. Jake is the founder of Clopton Capital. Jake, thank you so much for being on the show today.
Absolutely. Thanks for having me on.
Jake, can you please tell the listeners who you are, where you come from, and what you do?
Sure. Yeah. Jake Clopton. I started Clopton Capital about 15 years ago. I live in Chicago now. I'm originally from upstate New York. What I do at our company, well, when I originally started this company 15 years ago, we were just capital markets. I still handle all of our capital markets activity today. We are a commercial real estate services company. So we're also an insurance company. We do commercial property insurance nationwide. We're a 1031 qualified intermediary, and we do commercial solar. We are starting up a brokerage side this year. I don't run the other sides. I still retain all the capital markets services. The deals we do are a couple $1 million, not from there. All asset classes, really nationwide, fixed rate mortgages, bridge loans, and construction.
Can you explain what capital markets is, as if I were a fifth grader?
Capital markets is really just a generic term for, the pool of lenders, right? That would, or like capital sources that would be available for like any one deal. So when I say, capital markets, it's, for instance, going to banks or private debt funds or life insurance companies, right? It's anybody that would potentially provide financing for something you're trying to get done.
So you are, for all intents and purposes, a full service commercial real estate provider that serves with, like you said, capital markets, insurance, 1031s, you're rolling out a brokerage. It's like a one-stop shop for
Yeah, exactly. I mean, we're trying to be involved in kind of like every spot along the way, the life cycle of the deal. I mean, not necessarily do all of those, like if somebody, comes to our door and, if they have a deal, they don't have to get involved in all those. Each, silo can operate independently, but quite often, we're working on several different angles for one particular deal, especially, financing, insurance going hand in hand. Where, if we're going to find deals for people in the future, financing insurance will go along with those. A lot of times, we're working with people to, when they sell properties, to go to 1031 exchanges, to finance the new property. So you can see how all of this kind of ties in together with each other.
Sure. So what got you to start Clopton Capital 15 years ago? What spurred this full service approach?
Well, that was the credit crisis, right? So the idea was to help people find capital for their deals, and at the time there really wasn't a lot going around. Before I started this company, I traded interbank having product users, 3-month LIBOR fund. And I had the idea to start the capital markets firm at that time. For a very long time, we were just capital markets, but the services angle, kind of came about 5 years ago, and started adding service lines as we were able to, to get them started. And I think we're getting pretty close to where we wanted to be once we can get this brokerage site going.
Hey, that's cool. Can you share with the listeners a bit about what is going on in the debt market today? Today is June 6, 2024. What are some of the struggles we are finding in the current debt market?
Yeah, so I mean, there's debt out there, right? For sure. It's just more expensive. That's the general theme of what's going on. Depending on what capital source you're going to, like, I mean, each type of capital source is having its own challenges. Banks are finding themselves with less liquidity than they did before. The Fed is doing a pretty good job of draining liquidity out of the system. So when you go to a lot of banks, sometimes you'll find some that really aren't even lending because they don't have the capital to do so, and they need to raise deposits to be able to lend. Private lenders, again, generally speaking, higher rates. but they're picking up a lot of the slack where banks are leaving off. A lot of those private lenders have lenders themselves, which are banks. So you see there's still kind of some challenges on that side as well. But I mean, there is liquidity. I think it's just the math problem for a lot of deals is more difficult because that's really what it comes down to, right? To make sure to get a deal pencil, it's just math, right? And when you have more expensive variables and cost of capital, a lot of these deals that are, tight are just not penciling. So we're seeing a lot of activity in deals where there's a lot more margin in them, like special use stuff, hotel storage or stuff like that. But still, a lot of core product out there getting done, but not as much as we saw before with rates were super low.
That's interesting. If there was one product type that you would love to see in finance, which would it be? What's like your gold standard product type all day, that you'd finance all day long?
Well, I mean, we'll do any asset class. The stuff that we end up seeing the most of is whatever's kind of trending in the cycle, right? So, even though we're nationwide, a lot of the deals in Chicago, a lot of the deals we end up seeing are in areas where you would expect, right? Like areas of high demographic growth, some out states, natural places like that. The asset types, again, is whatever's trending out there, and currently seeing lots of storage, lots of car washes. Actually, private equity has gotten very interested in car washes. And generally speaking, the major finance type we're doing is construction. So I think a lot of people are finding, value in being able to build new things today, versus kind of like buying stuff. I think there's still a good ask spread between buyers and sellers. That's still a little difficult. So I mean, that's generally what we're doing a lot of at this point right now. I did very like a multifamily deal earlier today, so that's there's still just straightforward acquisitions going on, but then a lot of that volume is kind of come in which really on the acquisition side, it's really just cost of capital driven. So I think as rates come down, we're going to see a lot more of that stuff for gas.
On the other side of that coin, are there any assets that you're struggling to finance right now? Or I suppose the positive way to put that would be any opportunities in the market.
Yeah. I mean, the stuff, office is pretty tough to finance. Anything with headline risk, that's pretty tough. Or like stuff that's needing really high leverage just to get done, that's pretty tough. When you're just picking up guys, so the debt out there is a little bit lower leverage than it used to be, right? That is definitely a function of, cost of capital. And then anything that you would expect, as headline risk, it's going to be difficult to get done. So, office is the major one of those that a lot of people are staying away from.
Do you think office is done, or do you think, like, what's your personal opinion on the office space and the trends that we have seen and are seeing?
Yeah. So I think it remains to be seen, right? Like the problem with office space, the work from home stuff, and I think all the work from home stuff. Yeah, I hit it during COVID, but it didn't reverse because the labor market was so unbelievably strong. I mean, there was 2 job openings for every person looking for a job. That is really starting to calm down and unwind. And I think, a lot of the problem with office is all of the power had reverted from employers to job seekers, right, in the hiring process. So, job seekers, of course, can say like, hey, I'm going to work from home. There's 10 more jobs out here. I think that's starting to reverse, and the power in the hiring decision process is going back to employers. And I think we've probably seen the bottom for office. I don't know if it goes back to where it was before, but I do think there's upside from here if the labor market starts to contract, because employers would, I think, on the for the most part, like their employees to be in the office. And if that kind of power dynamic goes back to them, they're going to be able to control it a little bit more. So we'll see. I mean, I don't think office is dead, and I think it's do you have to work in the office as a function of kind of the hiring process. Plus, I think just the ecosystem around offices that were built up in downtown areas. There's a lot of people pushing for that to happen, especially cities, right? Because it's not just offices that suffer; it's all the restaurants around them, it's all the retail around them, it's all the logistics stuff. So, I don't think it's that. I don't think we need quite as much office space as we have. But I do think there's upside from here.
It's so funny. It like just reminds me of the exact conversations I had about retail 2 years prior to when Office was the headline. It was like,
Yeah.
oh, we overbuilt retail and retail is dead. And now it's like, retail's thriving. Office is
Well,
dead.
yeah, it was the Amazon effect, right? I mean, it was like, all right, Amazon effect. So all retail is dead. Everything, and just it's just not the case. I mean, a lot of big box, yeah. But there's still big box retail out there. So, but a lot of it just convert it to stuff that you need to go to, right? Like, I remember when all these jump zones were first coming out, nobody wanted to touch those things. And now it's like, oh, it's a jump zone. You actually have to go there to do it. So, so I mean, yeah, I mean, perception's definitely, changed over time. And I think, especially, how many headlines were, that said death of retail? I mean, it was like every day. And there was a lot of death in retail, don't get me wrong, but I mean, that doesn't mean the retail sector is going to disappear.
Yeah.
Closed malls. There's no line in them malls, but retail still.
Oh, yeah. No, it's humbling to see the headlines and then be in the trenches. And yeah, I don't like to talk in absolutes because anything could happen.
Sure.
So tell me, I know you said you have an arm of your company that does insurance. Tell me about some trends that you have seen surface in insurance in the last 2 years, because I feel like I'm talking about it to tenants and landlords all the time.
Yeah. I don't think anybody hasn't realized that insurance costs are higher. Materially higher, right? Like some of these policy renewals we see out there that we're getting like 100%. It's dumb. Or more. I mean, it depends where you are. I mean, if you're anywhere with wind, yeah. We've seen some pretty big increases. But not only increases, we've seen some insurers just completely leave certain markets. Like they're like, yeah, I know you can't even pay us to be here. So I mean, I think the days of when people would model like just 3% growth on insurance year over year, I mean that's done, at least for now. And the days of just kind of auto renewing insurance policies without taking back out the market, those are done too. I mean, you really need to do the work to find new carriers every year to try to get the best rates. And it's funny, this is why we started the insurance side too, right? Because we were seeing that happen over and over. And candidly, with a lot of like the larger insurance agencies out there, you got like, let's say you look at $30,000 policy, they really don't care. It's not that big, right? So they're not going to market it. And a lot of what we saw is people were getting their renewals like 2 days before their insurance was up. And by the way, it also went up 80%, and you have no choice but to, sign this, or else you have no insurance because there's not enough time to market, insurance for 2 days. So, we've really been on people to, let us widely market their insurance to as many markets as possible, and to do it way ahead of time so that, you really have enough time to properly market this stuff and get the best price, because, there's new carriers coming into markets, there's some carriers leaving. So, I mean, it really takes like a lot of grunt work to get to the right, places where it needs to be today. I think if you sit around and just kind of accept it for what it is, you're going to end up with some really inflated insurance costs, or just a cancel policy to insure leave.
It's so crazy to me how insurance companies can leave an area, but what do I know? I'm just a warehouse peddler, so it's
I mean they're companies like any other, right? They can choose to or to not be in certain markets.
Yeah. Let me ask you, what are you finding to be the most common capital sources in this ever-changing market?
That's a good question. The main capital sources that we use are banks, credit unions, and private debt funds. And a lot of that comes down to what the equity looks like. Right? Like if I'm working on a deal that's syndicated or something like that, right? Where you've got one guy with a bunch of investors, it usually needs to be non-recourse. So we're looking at value add or structure or something like that. It typically ends up, the guy doesn't, the one guy that's the syndicator doesn't want to go on recourse for 100% of the debt. So I end up going to like a non-recourse and private debt fund kind of route. Or if it's like a term loan, right? Agency or CDS or something like that. We do use, life companies for some non-recourse debt as well. If there's recourse available, we're really going to banks, and finding the right banks today is definitely a lot of grunt work. You got to get this wide net cast approach. Talking to 3 banks isn't going to do it. But that's what we're really good at, is creating individual capital markets around each deal and wrapping in everybody that can even geographically lend on the thing and talking all. So it really is situational with capital source, we'll end up using. And we think it's top down, like understand the equity first approach, and then kind of filters in where we end up going.
Wow, that's fascinating. Jake, what makes you happy about what you do every day in commercial real estate?
I think the thing that I like the most about this business is, there's 2 things. One is, commercial real estate is not just this commoditized product. It's all relationships, and the people there, they're pretty entrepreneurial, good problem solving, and motivated. So I definitely like the people that are involved, the relationships. The second aspect is putting the puzzle together, right? Every deal is a bit of a puzzle, and, if you figure it out, the thing just works. So that's really kind of the aspect of it that I really enjoy.
Yes, I call it I refer to it as like being in the trenches, but making it sound like a puzzle, that's a much lighter way. I think about a puzzle in the trenches, but it is.
Sometimes the pieces of the puzzle are personalities. So, yeah.
Oh yeah. Hey, that's it really would not be half as fun if it weren't a puzzle. And it makes it even that much more rewarding when it's one of those really easy puzzles that comes along once every few years.
Let me know if you see one of those.
Yeah, I know. Like I said, once every few years after you're in it for a while. So
yeah. And the whole time you'll still be thinking, man, something's coming eventually. I just know it.
Yeah. Yeah. It ain't over till it's over. Jake, thank you for being on Commercial Real Estate Secrets. Where can the viewers find you, contact you, and follow you?
LinkedIn, just type Jake Clopton into LinkedIn, and very easy to find. I think I'm almost at the max amount of connections, but I'm really easy to find on there, or just all my contacts info is on there, or our website, CloptonCapital.com. We're extremely easy to go.
Awesome. We'll put all your information in the show notes. And for everybody listening, we'll see you next week. Thank you for tuning in to Commercial Real Estate Secrets. If you have found our podcast to be valuable, please be sure to subscribe, rate, and review on your favorite streaming platforms, and make sure to follow us on social media at Aviva Real Estate. For brokerage services or to get in touch with us, head over to thewarehousehotline.com and submit a contact form. My name is Aviva. This is Commercial Real Estate Secrets. We'll see you next week.